Let's talk about, demand for used cars has never been, I don't think, higher than it is today. That means that used car prices are higher. But does that affect the margins that these dealers can earn on sales? In other words, they have to pay more to acquire the used car, and then they can sell it for more, but can they keep their margins?
Yeah, honestly, when you look at the franchise dealers like a Group 1 or a Lithia, their EBIT margins are at levels that are a couple years ago would have seemed ludicrous to model, frankly, at now at about 8%. Before the pandemic, a good dealer could do 3 to 4%. So, and the way the dealer, to your question, the way the dealers run the business is they look more at gross profit dollars and just worry about where the margin comes out at the end of the day. But right now, it's actually been really strong because the pricing power is so excellent because there's no inventory. You would think when there's no inventory, it'd be bad for the dealer's earnings, but there's enough that they still have outstanding pricing power right now.
And why is there so little inventory among used cars? We know about the reasons why there is less inventory among new cars, having to do with the chip shortage and other supply chain things. But why is there less inventory among used cars?
Yeah, ultimately the two are connected. When the pandemic hit, that not only caused a crash in new vehicle sales, but then people aren't coming in to buy a new car and trade in a used vehicle. Mm-hmm. And so you see used vehicle prices will initially, and this happened also after Lehman Brothers, used vehicle pricing initially just tanks, but it very quickly skyrockets because of the inventory dries up. And so unfortunately with 2020 and 21, we've had that double whammy of the pandemic. And then because of the pandemic, the chip shortage, and the chip shortage inventory problem really got bad around mid 2021.
Right.
I think both Tyler and I actually were in the market for new cars recently.
Yeah.
I bought a used car. It was quite a headache. I haven't bought a car in about 15 years, so I was in for a real treat for everything we went through. But if you're looking at buying more than just the cars, you want to buy stocks, you want to invest in companies sort of behind this used car trend, where should you put your money? What's the best way to play it?
Well, public-wise, there's not tons of companies. There's the digital startups like the Carvanas and Shifts and Brooms and whatnot, and then I think everybody's familiar with CarMax. But there's also the 6 publicly traded franchise dealers that I cover, which is names like Lithia Motors and Group 1, Sonic, Asbury, Penske, AutoNation, et cetera. Lithia, for me, does look extremely interesting. Years ago, I was on CNBC and said they're the Walmart of auto dealers, and they are because of their specialty in the rural markets. But since that time, they've also expanded into metro areas, and they're just growing voraciously right now. I actually equate their growth of wanting to get to what I call the 50-50, what they call the 50-50 plan of $50 billion revenue, $50 in EPS by 2025. I call that basically an old Tesla term of ludicrous mode, or you can say plaid now, because it's just outstanding growth. And honestly, they're ahead of schedule to do it.
Shepard Smith here. Thanks for watching CNBC on YouTube.